The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 30th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hope everybody had a great weekend out there. Great to be back with you. Let's go look at one of our tools. This is the tool I call, well, actually, this is the tool, let's just say, success is a journey. That's the tool we'll call this. You've heard the phrase, success is a journey, not a destination, and half the fun is getting there. So how do we get there, and what makes the difference between a life filled with struggle and one that's full of earned pleasure? I believe the answer comes from the two most fundamental laws of the universe. Those two laws being the law of inertia and the law of attraction. Now, the law of inertia states it's easier for something in motion to stay in motion, which of course means the opposite is true. Once something is at rest, it's easier to stay at rest. Just think about it in your life. There's probably periods of time where you were exercising all the time, and then, you started to maybe get a little bit lazy. I don't know if that's the right word out there. And then it became more and more difficult to get off the sofa out there. When something is not at rest, well, it's easier to keep going. When it is at rest, it's easier to rest. So if you're a person who knows you need to take action, yet you can't find the motivation to move forward for whatever the reason, know that once you take action, the law of inertia will take over. In fact, taking some action will let you take what I consider to be massive action. Perhaps you need to start exercising but are finding it tough to get started. Well, we all know that once you do get started, inertia will take over. Perhaps there is some form of education you're looking for. Once you take action, inertia will take over. Success is indeed a journey, and success, well, the beauty there is it'll breed more success. Take action, folks. Take massive action, and the inertia will take over. Let's go check out the inertia inside these markets out here. Right now, we've got the Dow futures trading down 144 points out at 15,051. S&P futures off 15 points, trading out at 1671. NASDAQ futures off 29 points at 3194. Russell 2000 off 11 points, down at 1060. King dollar on the move. It's on the move to the downside, I should say. It's down 23 ticks right now. We'll take a look at the currency market. Goldilocks and the hold currencies, that's trading off about $12 right now, down trading out at 1326. Silver's off about 1 3/10% this morning, down 28 cents, trading at 21.55. Light sweet crude has broken to the downside out of that 7-point consolidation area. It is now traveling at 101.37. So its inertia is to the downside. If we take a quick peek around the globe out here, over in Asia last night, the Nikkei off 2%, down 300 points. Hang Seng off 1.5%. That was off 347 points. The Shanghai, that was up about 0.7%, up 15. Over in Europe right now, the DAX is trading down 93 points. The FTSE down 49. Our calling number is 877-927-6648. If you give us a call, we'd be happy to take a look at your stock. Let's start off by, what should we take a look at first? Here, let's take a look at the intraday chart here for the ES Mini. If you're watching us on TigerTV, thanks so much for doing that. Maybe you're listening on the radio or your mobile device at TFNN.mobi. Remember, you can always get the live stream of the show by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with 3 smartphones. Click on that. The show will stream live. You would be looking at the descending price channel on the 30-minute ES Mini. When price gapped down last night, it ran right into the bottom of that price channel out there. It also got into a extreme oversold condition, and all that it did all overnight was just work off that condition, and now it has some room to run lower. I expect that's what we're going to see at the open. 16.59 is in the cards right now. The ES Mini trading out at 1671.25. So that's where it is headed to on the 30-minute chart out here. I'm not seeing any kind of reversal whatsoever. In fact, it would take quite a reversal in order for this thing to start to become bullish. That would be a get above the 1685 level. You're at 1671 right now, so I don't see that taking place. At least not this morning. If we take a look at the daily charts of the futures contracts, let's begin by looking at the week link out here. The week link is going to be the Dow futures. Now, let me get rid of a couple of these things that are out here. Those are just some cycles in case you were wondering what those things were. Now, if I take a look here at the Dow futures, number one, we've got two different trends that we're taking a look at. One is the rising price channel. That takes us all the way back into the 2011 time frame, the October 4th lows that were put out there. And you can see those are the blue diagonal lines that are just simply moving, the blue diagonal lines moving up. And we can see here right now that price is moving down inside the Dow futures. Price is moving down into that level out there. You also can take a look at this little rising trend line coming off of the lows here from November 16th. And you can see we've got really kind of, they're almost hitting simultaneously in the same spot. So this is going to be a pretty important area to see if we can find some support here inside the Dow futures. Of course, last night they did gap down. So when you start gapping down into an area of support, that is not a very promising thing out here. But we'll see. As far as how much further should we see the Dow futures move down to before they get into that support, it's probably somewhere near the swing point high from August 27th out there, which would be about the 14,943. Let's just call it 14,950-ish would be really the area. And right now you're trading out at 15,050. That would be about another 100 points down to test that area. So that is on the Dow futures. Let's take a look at the ES Mini. Let's see what it is doing here on the daily chart. We gave you the read on the 30-minute chart. If we take a look at the daily chart, that also has a rising price channel. This one here just going back to the November 16th lows out there. And if we take a look at from low to high, meaning going from the most recent swing point low, which was August 28th, that low out there was 1624.75, all the way up to the high that was put in the Thursday. That was September 19th. Day after Uncle Ben Bernanke Day out at 1726.75. The sweet 618 retracement is at 1663.71 out there. So that's where we should see a bit of support. Right now you're trading out at 1671. So what is that? That gives us another 7-8 points or so to the south before we see if there is any kind of support inside the S&P futures. What we can also see here is that was coming from the overbought territory as it was making its high back on September 19th. We'll see if it's going to make its way all the way down to that oversold level. That would take the ES Mini probably all the way down into the bottom of August 27th. But one day at a time, one moment at a time. Let's go take a look at the strong hands inside the marketplace. That would be the NASDAQ futures. Inside the NASDAQ futures, there is its rising price channel. What we have seen here is NASDAQ futures still have not completely given it up. They are still traveling with inside that move up off of the FOMC release day. That is September the 18th. The low there is 31.83 and a quarter. Your trend's about 10 points lower than where it is trading at right now. So the strong hands in the marketplace on the daily chart have not broken down just yet. In fact, let's take a look at the Russell 2000 out here. Now, this chart here is delayed by about 10 minutes. The Russell 2000 is trading right into the swing point from August 5th. That's its swing point high. If you get a close below 1062 on my chart, it shows we're trading at about 1061.50 right now. If it closes back below that, then it would be inside the lower part of its range out there. Now, it suggests that the breakout to the upside may have been a false breakout. And that's on the daily charts. Let's go take a look here at the commodity sector. Let's go see what Goldilocks is doing. Right now, that's trading off about $14 out here. Gold looks like it wants to, number one, at least come down and test that big old bullish engulfing candle, that big morning star reversal pattern that took place on September 18th. And so 1291.50 is going to be the first place where gold is going to go ahead and give us a piece of information out here. Otherwise, it's just simply traveling sideways, not doing a whole lot. So 1291.50 is the number you want to be paying attention to. If, in fact, gold closes below 1291.50, what that will set up is an A to B equals CD down. That A to B equals CD down would go ahead and take gold down to about the 1194 range. Well, if we get down to 1194, it might as well go test the lows from June 28th out at about the 1179 area. But not until it breaks through that big old nice bullish engulfing candle low from September the 18th out there. If we take a look at silver, we're going to see a similar looking pattern out here, just traveling sideways, so not providing much information. The information would come from the September 18th candle, and the price on that, the low you want to be paying attention to, is $21.22. If, in fact, you see a close below that, that will set up your A to B equals CD down inside of silver. That A to B equals CD down would start with the swing point high of August 28th. That is at $25.12. The low being that $21.22 area that we are watching. The C point coming one day later, September the 19th. 1-to-1 takes it at 1956. I suspect it's more like a 1 to 1.272 A to B equals CD down, should it, in fact, close below the, I'm talking silver, close below that September 18th level. I'll take you all the way back down to 1850. The actual low is 1818. Which is the June 28th low. So that's what we want to be watching at inside those two metals. If we take a look at light sweet crude, well, this is a beauty. You know, we showed here the consolidation zone that it was traveling within. We also showed the trend line coming off of the April the 18th low. You'd use the level of 87.56. Next touch point that I was using was June 25th, out at $94.59. So we had this consolidation box. We were watching light sweet crude, and now it seems to have broken with conviction to the downside, trading out at 101.30. That's a 7-point consolidation zone. It should find support here at the original consolidation that it broke out of. And this is going to be key. This is probably one of the better potential trades that are setting up here, because we had a 14-point consolidation that light sweet crude was traveling in for over a year. Went from July the 16th of 2012, broke out of that consolidation. Well, broke out just under a year later, back on July the 4th, July the 5th out there, when it broke above that area. Now, when you break above horizontal consolidations, oftentimes prices are going to come back and test that area. So we've got two competing patterns here. The 7-point consolidation range, I'm going to give way to the larger consolidation, this 14-point range, the top of which is about the $98, $99 level. We'll call it, let's call it $99. So $99 here at 101.30 is where we'll find out whether or not light sweet crude is going to find its footings, its legs. Because if it closes below $99, guess what? That sets it run all the way back down to $85 out there. 877-927-6648. Dow's off 150 right now. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. If we take a look at some of the movers here in the pre-market, dollar-wise to the downside, Apple leading the charge. It closed out at 482.75 on Friday. Last trade here firing off at 478, but one taking it truly in the shorts. Ticker symbols ACHN, Echelon Pharmaceuticals. They are getting crushed this morning. They closed out at $7.24. Their last trade fired off at $3.46 there. That is over a 50% haircut that they are taking. Tesla Motors taking a little breather here this morning. They closed at $190.90, only down about a buck or so. Trade down at $189. So still the sexy stock out there. Facebook off a little bit this morning as well. They closed at 51.25. They're down about a buck. Last trade fired off at $50.28 out there. To the upside, Active Networks. So it looks like that is on the completion perhaps of a buyout. They closed at 11.40. Nice little premium this morning. That's trading out at 14.38. Brookfield Office, BPO, being bought out by Brookfield Partners. Sounds like a little shenanigans going on there. They closed at 16.77. They are trading out at 19.60 right now. Let's continue taking a look at the commodities out here. Let's take a look at bonds, see what they're doing now. If we take a look at the pattern here inside the 30-year Treasury, 30-year Treasury formed an A to B equals CD. The 8 point on this was August the 12th high. That was out at 135.02. That's your 8 point. Your B point was down at the level on August 22nd. That low, 129.28. Makes a retracement. Looks like it probably was about a 0.618 retracement up to a high on August 28th. That was your C point. 1-to-1 A to B equals CD. That level, projection 128.09. What did price actually get down to? 128.12 out there. You got to like that. So now what we've seen here is a 0.786 retracement off of that entire A to B equals CD. No bears here yet in control of the marketplace here. What price has done, it just simply stopped at a level that would be normal at this stage, and that being the 0.786 area. And you got the clue that price was going to at least make it to that level, and that was on Uncle Ben Day, September the 18th. And why? Because take a look at that wide-ranging bar as price was making that retracement. Beyond the 0.382, actually touched and tagged the 0.618 area. That was telling us it wanted higher price and was likely going to go to the next floor. That's what it has done here, just kind of camping out at this level. Looks to be more like what we'll see here in the 30-year Treasury, just like we're taking a look at light sweet crude and it coming back into a area where it had broke out from a consolidation area. In the case of the 30-year Treasury, well, it has tested this area on numerous occasions. Looks like it wants to actually go ahead and test that area again, which will take us into about the 135-ish range. It's got to get over 133.2 out there in order for that to take place. Natural gas, if we take a look at the natural gas contract out here, formed a nice little hammer candle. I did this on the, this is the December contract that we are taking a look at. Form that candle formation on September the 26th. Now you've got, you got a confirmation of that actually on Friday out here. So this is being tested, and what it should find really good support out here. This is kind of an interesting trade that I'm personally keeping an eye on, because if we take a look at what natural gas did, was it also came back when it formed that hammer candle, it came back and tested the swing point from August the 8th out there. Now, that swing point had 26,000 contracts. It came back with 25,000 contracts. So you got a test on lighter volume, and you've got a nice bullish candle configuration out there. Still coming back on a little bit too much of volume, but we'll see. This would be another test of that area on light volume would be nice. That area, again, being the high of August the 8th, which is $3.64 or so, or really the bottom of that hammer candle. That would give you a nice little reward to risk trade out there. That low is $3.62. Why? Because if it fails, if you get it closed below $3.62, well, price will go and travel all the way down to the bottom of that August 8th swing point at a minimum, because what you could actually be doing, if you break a hammer and you're long, you're wrong, that hammer candle, that low out there, could actually be the B point of an A to B equals CD up. So this is going to be an interesting one to watch. But so far, this thing has behaved, well, it's behaved nicely, with the exception of if you take a look at where price did stop. It stopped at the top of this descending price channel. So that hammer candle is all important. That is on September the 26th out there. Let's see here. Right now, futures, we'll go take a look at the currency market. Now, this is one thing we do want to be paying attention to. You know, all the currencies, they gapped at the open yesterday as well, you know, all brought to us by our folks of the let's just call it our politicians out there. What we'll have to take a look at, we'll do it when the market, after the market opens. We'll come back, we'll take a look at this, you know, my favorite currency pair, and that is the euro, Japanese yen. It broke through an area that should have held, gapped down right through it last night when it opened. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 152, trading out 15,106. S&P down 15 points at 1677. Composite down nearly 40 points right now, trading out at 3742. Russell 2000 off 12 at 1061. Apple down $5 and change. Microsoft off 30 cents. Google off $5 and change. Leading the charge, the upside is Active Networks ACTV up 25%. Little premium on the buyout up there. Brookfield off, as we covered that earlier. That was to the upside. You've got OMER, Omerus Corp. That's up 7% this morning. I don't see, that looks like a drug-related stock out there. To the downside, Netflix off about $5, Apple down $5, Baidu down $3.70, Ashland Pharmaceuticals, we mentioned that one. That one's getting the 50% haircut out there. ACHN is the ticker symbol. You've got Goldman Sachs off $3. Green Mountain Coffee Roasters down nearly $3. Yelp off $2.50. IBM off $2.34. Let's go take a look at IBM. IBM is going to go test the resistance or the support area again. Give me a moment here to find. There we go. IBM, the core chart out here. Let's go take a look at what it is likely going to trade into. It's this nice long-term consolidation pattern that is out here. And this will reveal a lot to us because this is a nice 30-point consolidation area. This takes us back into the January 2012 time frame. I'm going to try to pull this back here. In fact, let me switch over to the weekly chart. Let's go take a look at the weekly chart. I didn't do that and take a look at the volumes. There, in essence, is the horizontal consolidation level that it broke into. I want to go take a look at the volume. So the volume on the week of July 13, 2012, that was 22 million shares. Then it came down and it tested that area on only 15 million shares the week of August the 30th. So the key is if, in fact, IBM gets down, and again, that area is right around the 181-ish mark, 182 level out here, and last week as was coming down only 15 million shares as well. So if it can't bust through that quite frankly is going to be at least short-term bullish. If it breaks through there, whether it's on volume or not, if it breaks that area, that sets up a 30-point move to the downside, and that is on IBM. So right now today, I didn't want the 30-minute chart, I wanted the daily chart out there. If we take a look at it, gapping down this morning, now what it's doing is coming right into that gap from September the 9th. So the volume to the upside, really not much when it had gapped up. That was only 3 million shares. So there's no real big volume there. The bigger volume was on September 11th, had about 5 million shares to the upside. On Friday, it was 3.9 million shares to the downside. So we want to watch IBM, and we really want to watch, remember, the Dow has been the weak link out here. So we want to be paying attention to is IBM as it gets into that 182 mark. So last swing point out here was on August the 28th. That got down to a low of 181.10 with 3.9 million shares out there. So we'll see if IBM is coming into that area a little bit hot. That swing point was also testing the swing point back here from July the 12th that had 4.9 million shares. So the first test was on lighter volume. We'll see if this next test, if in fact IBM gets down there, is also a test on lighter volume. So we want to be paying attention to that. As long as we're in the core stocks here, let's go ahead and continue to look at them. Let's look at Google, see what Google is doing. It's trading down a bit this morning. Trade out at 869. If we take a look at retracement levels off of its high, off of its low from August 30th to the high from September 19th, we'll see it's resting right now at the 0.618 retracement, which is 868. Neither overbought nor oversold, so this has room to run to the downside out here, which would be testing the swing point from August 30th, which has 1.8 million shares. Now, that was testing that nice hammer candle that is on June the 6th. And that had 2.5 million shares out there. So that should be pretty decent support. It's been tested twice thus far. I don't know if price will actually get down there, but that hammer candle is where you want to be paying attention to on Google, because if you get a close below 847.20, that'll set up a nice cascade run down to the lows, most likely in that early April, mid-April time frame, right around 766. And if it is able to pass that not just the hammer candle, but the swing point from August 30th with more than 1.8 million shares, that would actually set up an A to B equals CD down. So you want to keep an eye on Google and see how it trades out here as it approaches that support level. Let's take a look at Intel, INTC. Let's go see what it is doing. It's coming down into the breakout area that took place on September 13th that broke out to the upside. 61 million shares out there. Coming down on Friday with only 28 million shares. Not a lot of conviction. Of course, we've only been trading here for just a few minutes so far, about 9 minutes. So volume is 2 million shares to the downside. No way for me to do that kind of a quick math there. But if we take a look at retracement levels, and go from the low, most recent low, which was also August 30th, you can see it's really trading at the 0.618 level, which is 22.73. It's trading out at 22.86 as we speak right now. That's on Intel. Let's go look at Apple. See what Apple is doing out here, trading out at 476 and change. Let's go ahead and pull this back. This is coming into a recent gap up. That was from the trading session of September 23rd, 27 million shares to the upside, as it was coming back on Friday, only 8 million shares, so coming back on light volume. Thus far in 10 minutes of trading, it's done 1.2 2 million shares out there. Almost an island reversal out here inside of Apple. As far as where this is trading to, you've got a 1 gap, 2 gap. It was not a 3 gap play. I remember we were taking a look at that. But it could easily come back. If it closes, well, let's look at it like this. If it closes inside the high of 478.55 out there, it's at 477.25. It ought to come down and test the low of that session, which is at 466. That is on Apple. Let's take a look here at ExxonMobil. Let's go see what ExxonMobil is doing. Number one weighted stock inside of the energy sector out there, so you certainly want to be paying attention to this. It's moving back into its 7-point consolidation range. It's trading right now into the swing point, so gapping down into that April 17th swing point. That has 17 million shares, the low of which is 85.02. The high is 86.38. You're trading at 85.83 right now. So it looks like we're going to get a test of that consolidation level. Now, if ExxonMobil closes or tests the 85.02 level, does on less than 17 million shares out there, because that 17 million was going against 19 million, which was going against 17 million. So if it can test that level, and we'll call it 85.01 or so, close back above it, do it with less than 17 million shares, you might have a nice little trading range out here. Now, what it did do is it has retraced back too far. It's also right now dealing with this swing point of an A to B, of a potential A to B equals CD down, and that is the swing point from August 21st. That has 12.7 million shares. So from a bullish side, you'd like to see it continue to move lower with less than 12 million shares, get down, test the bottom of that consolidation level. If you're bearish, you want to see volume coming out of this thing big time, and you want to see it with more than 12.7 million shares. That would give you a confirmation of a potential A to B equals CD down. But then what you'd be paying attention to is that consolidation range. And a close below 85.02, that would then go ahead and give you your confirmed A to B equals CD down. What we can see, though, is that price here inside ExxonMobil getting to that oversold level. So it looks to me more like the bottom of this consolidation will hold versus give way. But we'll just have to wait until we see price get down into that area out there. That's on ExxonMobil. Let me see what else I've got here in the chart. We've got Microsoft, nothing big that I see there. Amazon not really doing much either this morning. Let's take a quick peek here at Amazon. Amazon has just really been moving sideways. It's all it's been doing. This is bullish versus bearish, because all that it's really been doing is working up. You can see how it got into that extreme overbought condition. Did that on September the 20th as it made a high, got that relative strength index up into the 74-ish type range. 73, looks like 73.35 actually. And all that it's been doing is just simply been moving sideways here as it has worked off that overbought condition out there. So that's on Amazon, so not looking too bearish at all on that equity. Let's go take a look at some of these stocks here that are popping and dropping. Regeneron Pharmaceuticals, boy, that is one that just simply won't quit. Want it to keep coming back, Regeneron Pharmaceuticals, I thought it was in one of these charts out here. Maybe it's in earnings. There we go. So Regeneron Pharmaceuticals, nice little consolidation box that it broke out of. Has not come back to a test. It broke out of that box on September the 13th. Did it with 1 million shares. Boy, it's up at, looks like all-time highs again today. It's trade down at 313. So this is the one that just simply won't give. But if it ever does come back to test the top of that consolidation box, 282-ish, and it can do it on less than 1 million shares or so, really the number you'd be looking at is less than 855,000 shares, and then take off from there. That would be a nice buy. That's on Regeneron Pharmaceuticals. Let's take a look here. I wanted to take a look at a couple of stocks here, which this one right now wasn't Dry Ships. That's what that one. I don't even know how that got there. Okay, well, boy, I had some stocks that I had listed that must not have saved something, because it was set up to look for some potential island reversals this morning. So I'm going to have to redo all of that work out there. That certainly was not inside of Dry Ships. Well, as long as we're inside Dry Ships here, trading out right now at 344, all it's doing at the moment is coming back into an area where it most recently broke out from. So we have Dry Ships here. Breaks out of the trading session of September the 19th. That's with 37 million shares. It looks like it's close to closing the gap. The gap from that trading session was September 18th. That high was 330. That had 23 million shares out there. So far in today's trading, it's got some volume on the push down here, 5.6 million shares. We'll have to monitor that. That was on dry ships. But let's go take a look at this stock here that's just totally getting crushed. Ashlon, ACH out here. ACHN, I believe. AC, where did it go? Yeah, ACHN. I just have to learn how to type here. ACHN. There we go. This thing is down with big volume, over a 50% haircut. Wanted to see where this was headed to. So if you take a look at this equity, if you were inside this equity, just take a look at the last time this thing had a downdraft, which was not that long ago. Big high volume high out there, which is being taken out this morning with even more volume. This high volume high took place on July the 2nd. Gaps down with 11.7 million shares out there. So that level now being taken out. Let's put this on a little bit longer term chart out here. Let's see what this is doing. Coming all the way back to, let's see, boy, there's nothing more here for support. Yes, it's coming back all the way to its original breakout. How about that? This is the weekly chart, so the original breakout on this takes you back to December 18, 2009. That price low was $2.06. The high is $3.50 or $3.56 right now. So you close inside $3.50 and it'll go visit the $2.06 area. Now, what is interesting here is this does have a high volume high. So kind of interesting. High volume high takes you all the way up to $13.32. Let me pull this back even further. That's on the weekly chart. Yeah, so it's got a high volume high out here. So maybe this becomes a nice little reward to risk play out here. I'd have to study a little bit further. But as it comes down, if it can come down to that December 18th level at about $2.06 out there, let me put it on a monthly chart. See if it's got a high volume monthly chart as well. Yeah, it's a high volume high on the monthly chart. Also, that is the month of January 31st out there. So ACHN might be one you want to pay attention to. I might just put it on one of my many watch lists out here. Let me write this down, ACHN, and just to pay attention to it. Let's go take a look here at the 30-minute chart. Let me go see what's going on. The EKG of the S&P 500. Right now, the Dow is off 147. Just looking to see what kind of candles we've got being formed here. So nothing substantially bullish here. Nothing bullish here yet at the moment. Of course, this session doesn't close out for another 30 minutes out here. Still not moving down into a oversold condition. So which is a little surprising. You would think as the doors opened up that you would have seen all of the bears just simply piling in, and we haven't seen that on the 30-minute chart here just yet. The market moved into more of a oversold condition at the open last night as the futures came online. We haven't seen that here just yet. That doesn't mean go buy it. Just simply pointing out at this point here, we haven't seen the rush out the doors. If we go take a look at the ETFs, let me take a look at that for a moment, meaning the ETF of the indices here. Let's go take a look at, see what kind of volume that we are dealing with. Let's go take a look at the SPYs. SPYs here right now gapping down right into support. 167.08 is the number. We've seen a low here of 167.15. That's running right into both that 0.618 retracement level as well as the rising price channel. That rising price channel inside the SPYs, you have to admit, this thing has held up really, really well. We saw a test of this area back on June the 24th. That level held. We saw a test of this area, slight breach, we'll call it, back on August 27th. Price got back inside it within 2 trading sessions. And this morning here at the open, this thing has come back down and tested that area again. So 167.08 should be some pretty decent support inside the SPY out here. That, too, though, not being in a overbought or oversold condition. Let's go take a look at the diamonds because they are the weak link out here. Let's go see. And volume-wise, by the way, volume-wise so far on the SPYs, about 18 million shares. So that's coming into that gap here. This gap up on September the 10th. That might have been Larry Summers' gap out there. 87 million shares, 105 million is what it's really going into. So far today, it's done 18 million shares in the first 19 minutes of trading. We'll see if this level of support, 167.08, can hold. Dow's off 155, S&P down 14. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global has a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. So let's take a quick peek here at the currency market, see what we've got going on. Let's start off with the Queen, the Euro-U.S. dollar currency pair. The Euro-U.S. dollar currency pair, it wants higher price. Nice wide-ranging bar on the date of September 18th out there. Then just simply a move sideways while it worked off that overbought condition out here. Looks like this is actually setting up an A to B equals CD that'll take you into the 137.99-ish level out there. That is on the euro. If we go take a look at the euro Japanese yen, I would take a look at the U.S. dollar Japanese yen, but I've got a bad tick out here that I can't get rid of until maybe I close the system down, and I'm not going to do that during the live show out there. So I can't even look at an intraday chart out there. I'm not going to mess with it. But the euro Japanese yen, we do want to pay attention to this. Now, this morning, or I should say last night when it opened, gap down below that all-important wide-ranging bar from September the 19th, the low of which is 132.30. So it's trading out right now at 132.26. So if you don't gap down here, if you can get back inside it, that is actually more bullish than bearish, and it would be especially more bullish if it would actually just went ahead and close the gap out here from Friday. So the low out there, 132.61. So you should be watching the euro Japanese yen currency pair out here because this has a pattern that has not completed. And that pattern that would complete out here would take the euro Japanese yen up into about the 135.65 level. This thing has made beautiful patterns out there, so we want to watch this. Why? Because that would put some fuel into the marketplace. This is the fuel. This is the engine of the marketplace here, so we want to be paying attention to the euro Japanese yen currency pair. As far as who has control of the ball, well, it is clearly now the Bears. The Bears, in the New York Stock Exchange, all they needed was about, I think it was like 170 or so net declining issues in order to take control. Well, right now we're minus 2,100 net declining issues. The VIX closed above that 50-day exponential moving average. It did that on Friday. It did that by being up by 9.96%. Right now it's up 12%. Let's go take a look at the VIX out here. And, 2 days in a row, I'm going to have to go back and, well, we'll see how it closes. Let's assume that it closes here up about 12%. When you have a one-day rate of change greater than 10%, boy, you've got odds that are like 70%. Even higher have been really since the lows back. Now, when I say odds of like 70%, 60 to 70%, that goes back till 2001 as far as the tests that I've done out there. And so 2 days back-to-back, I'll have to really go back through the charts to see if I can locate that out there and then see what happens. But right now, it is trading up well above the 50-day exponential moving average. It's up at $17.29. It's up about 12% out there. So that would suggest a potential one-day bounce out here. But we'll have to take things one day at a time. We'll have to take a look at this really tomorrow morning out here. But it is something for us to be paying attention to. But the New York Stock Exchange, we go over and take a look at that here real quickly, just to give us a better feel for what it is doing. Gapping down this morning. It actually had a slight gap, I believe. It had a slight gap on Friday as well. The low on Thursday was 96.96, and the high was 96.93 on Friday out there. So we've got a second gap here inside the New York Stock Exchange. Maybe that's going to come all the way back down to the September 19th area. So it's trading below the 0.382 level. 94.98 would be the 0.618 retracement on the New York Stock Exchange. I suppose once the market gets some jolt as to what the Senate might do, we'll see some more movement inside this market. Folks, if you're off to start your Monday, have a terrific day. Otherwise, I look forward to seeing you soon. Take care. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.